All right, guys, the webinar is being recorded. Welcome, everyone. Thank you for taking the time. All right, so as we discussed, first thing everyone was talking about is how to be confident in your trading. Now, the thing with confidence is I cannot really show you anything on the charts for you to be confident. Confidence comes from the way you trade, how much you trust in your analysis, and experience in general. Now, let me give you an example. Let's say when you were a kid and you were learning how to ride a bicycle. In the beginning, you fell down several times, but it wasn't like you were like, okay, this is not for me, I'm not gonna try anymore. You kept going until you started riding it properly, right? And then it just became your second nature. So there was nothing like being confident or doubting your abilities in riding a bicycle. You just kept at it, and when you started balancing and riding it properly, the confidence just came. It was just innate nature at that point, right? So trading works the same way. Confidence comes with your ability of trading and how much you trust your analysis. And you won't trust your analysis unless you know you've invested in yourself, which is why I always keep saying you have to invest in yourself. You have to put in the time for education. You cannot take signals and stuff like that or depend on anybody else for you to be confident in your trading. Confidence is going to come from your increased abilities in trading. So the more you practice, now the best thing to do this is improve your skill. There are people who are making money. There are people who are making the kind of money you want to make. Ask them, ask questions. Everything's going to begin from you asking a question. And if you're hesitant to invest in yourself, you're not going to make money. Like, don't start trading thinking of it as a get rich quick scheme. That's where people get their biggest losses from, because they start trading, and let's say you start with $100 account. You're right away hoping to make $1,000. Now, $100 to $1,000, how much percent increase is that? That's a 900% increase, right? 900 times your initial investment is going to be $1,000. Now, see, if you think in terms of the money, $1,000, whatever, not a big deal. So this is what gets everybody. You're like, okay, I started with $100 and my profits only, let's say you made, I'm not going to do it big. Let's say you made $10 the first day. Now in your head, you're like, oh, I only made $10. That's nothing. I need to trade more. And then you keep at it until you blow your account. And then instead of feeling confident, you feel like shit all over again. You're like, oh, wow, this is not for me. I cannot do this. Then you're like, I don't care what anybody's going to say. You blow that account, you're depressed for at least that day. Then next day, you're back to studying, you're looking videos, you're taking signals, you're doing this, that. Then after a week, you somehow fund the account again. You take it now this time, instead of $10, you make $30. You're at 130. Then your mind kicks in again and you're like, oh wow, I only made $30. That's nonsense. Then you overtrade again. Then you keep taking trades that you shouldn't even be taking. Then you blow that account again. And then this cycle keeps on going. Everybody with me so far? Doesn't this happen to all of us? So this is where your knowledge comes in. So if you, instead of blowing those 5, 10, 100, $200 accounts, if you just invest in yourself to begin with and put in proper practice, you see, you wouldn't have to blow any account. Think in terms of this. Any bank in the world, if you invest, won't give you more than 3%. Any consumer bank. Now, if you invest in indices and stuff, the maximum interest you would get is 6.6 to 8.5%. Anybody who claims they're going to beat the market, they're straight lying to you. I'm not talking just about Forex, I'm talking about financial markets as a whole, at a bigger perspective. Anybody that says they're gonna beat the market, they're lying to you, to your face. Don't believe that nonsense. The maximum interest you're gonna get is somebody who can mimic an actual moving index, and you can get somewhere from 9, maximum 10% a year. A year, that's the keyword, within a year. So if you start with $100 account and in one day you made $10 and your account is at 110, think of that in terms of percentage. You just increased your account by 10% in just one day. Imagine that increasing every day. Let's say you do 10% every day. I'll let you guys do the math. Tell me, how much would you have in a month? You started with 100, you're increasing 10% every day. How much would you have in a month? Roscoe's saying about 1900, Everett's saying about 500. See, the first day it's going to be 110. Next day, 10% increase on that, it'll be 121. So forth, you keep doing, you'll be in thousands easily by the end of first month. So focus on being consistent. Don't think in terms of money. You'll never get confidence like that. Focus in terms of percentage. Master your skill first, then leverage higher, bigger lot sizes or whatever. Now, I am not against scalping, but I will definitely say this. If you're only a beginner, don't even bother with scalping. Don't even bother with that, because market's gonna keep taking your money and you'll just be in this vicious cycle over and over, blowing accounts. Anything below 1 hour chart is a big no if you're just starting. Don't even bother with 15-minute charts. If you're a beginner, 15-minute, you're gonna lose money. That's what's gonna happen. And I'll prove it to you right now. So this is how you get your confidence. Now, any questions, any comments so far? Or is that making sense to everyone? Before we move on to talk about stop losses. So invest in yourself first. Think in terms of percentage. Don't compare your results to anybody else. You don't know what anyone's account looks like. If you have $100 in your account and you made $10 that day, get away from your desk. Don't take any other trade. Enjoy that feeling that day that you made profits. Don't focus on the amount. You increase your account by 10%. Focus on that. Focus on the profits. You're never going to make money thinking about losses. Focus on the profits. Make your mind believe it, that it's easy. Trick your subconscious mind into believing that this stuff is easy, that all you're doing is taking profits. And before you know it, it's going to be your second nature. Just focus on that. You blew accounts in the past, it's in the past. Get over it. Don't ever talk about it. Focus on the profits. Somebody made $10,000 today, doesn't matter. You focus on your increase and keep focused on that. Unless you can control yourself from being happy when you make money or sad when you lose money, you're not going to be successful. Not in just trading, in anything that you do. So focus on those profits. Focus on the percentage that you've increased your account. Focus on that and you're going to be good. Trading's going to come. Skill's going to come with time. Don't think of it as a get-rich-quick scheme. Okay, let's take an example of what are some of the highest paying jobs? Corporate lawyers, doctors. An average time that a corporate lawyer takes to get a job, or actually just the education to be a corporate lawyer, average time is about 6 to 7 years, right? For doctors, it's about 8 years. And then eventually they start with about $100,000 to $120,000 a year. So imagine if you put those, I say put half the time of that. Let's say you put 4, even 2 years to proper education and being consistent, making, I don't care, make $100 a month, but make profits. Put 2 years. That $120,000, the doctor or corporate lawyer salary, You can make that within matter of days, months, whatever you want to call it, depending on how much knowledge and time you put in. So you see where I'm getting at. So people come to trading thinking they're going to be millionaires overnight. It doesn't work like that. It just doesn't work like that. You have to focus. You have to put in the time. You have to put in education. I blew good 7, 8 accounts before I ever made a withdrawal. I have been through this cycle. I'm not lying. Like I blew my account. I'm like, okay, let me study now. Then I would study for 2, 3 days, and then I'm anxious. I'm like, oh wow, I just keep studying. I need to make money. I'll put in $200-300 again in the account, blow it in 2, 3 days, then go back to studying. And I kept going through this cycle, even though I traded stocks before that. But when I came to Forex, I came with the mindset that, okay, let me be rich real quick. Let me be millionaire overnight. No, it doesn't work like that. Nobody knew Warren Buffett till he was like 40 years old. And after that, he became a billionaire and he's been in the top 5 ever since. He's 77 years old now, or 76, whatever. He's been a billionaire ever since. So you see, up until 40 years of his life, nobody even knew him. They just knew him because of his dad was a politician or something. So you see, it takes time. You cannot expect to be rich overnight. Put in the due time in Forex and you will be profitable. Invest in yourself first. The money that you blow on accounts, that's not an investment in yourself. Your investment in yourself would be books, education, courses, whatever. Find some, like taking signals or joining some, I don't know, MLMs and stuff like that. That's not an investment in yourself. Because at the end of the day, someone else is trading, so you're dependent on them. Learn how to fish yourself. Don't just depend on getting a fish. Does that make sense to everyone? Does that clear everyone's thoughts of how to be confident? If we're good so far, then let's move on to talking about stop losses. Everyone good? All right, awesome. Okay, so let's talk about stop losses. Now, let me ask you guys this. When I say the term stop loss, what's your first thought? What's a stop loss to you? What do you think it means? Why do we need it? Like, what is stop loss? Why do we need it? Stop. Like, what does it mean to you? Roscoe's saying it's how much we are willing to risk. DK is saying in case of trade going bad, it protects you from losing too much. The money you're willing to lose. And Vlad is saying a method of risk management. All right. So there's all these different terms of stop loss, or everybody has their own understanding. But if I say it in simple terms, isn't stop loss your first line of control in a way in case a trade goes against you? Now, you should always use stop losses. They're very useful. But if you're going as per the industry standards, yeah, Sheldon, I was just getting to that. Sheldon's correct. He's saying a stop loss is a fail safe. He's right with that. That's what I'm getting at. So when you're talking about stop loss, it simply means it's the first line of control of your trade in case it goes against you. So I'm not discouraging stop losses, or I'm not saying don't use them. You should use stop losses. They're very important. Sometimes there might just be a glitch, or brokers have this one excuse all the time that their liquidity provider messed something up, or slippage, whatever the hell. So you should use stop losses. But if you're using it as per an industry average or industry standards, and at the same time you're trying to be confident in your trading, so like Sheldon said, That's just contradicting everything. That just doesn't work. Now, let me ask you this. All right, everybody see my screen, right? All right, so you see I have this area highlighted here. Now, let's say we're on EU on 4 hours. So let's say you were looking at this chart and this candle just blasted up. It just blasted up. What are your first thoughts when this happens? When this candle just blasts up? What are your first thoughts when this is happening? Roscoe's saying go long. Everything. Should I enter on the next candle? Correct. So this is the first thought. Now, especially if you're new, you see a big candle go up, you're only thinking that, oh, it's going up, let me buy. It's going up, let me buy. That's your first thought. Now, another thing, what most of the people do, that when they see it's going up, how many of you go to lower time frames for an entry? Average says me. All right, so let's just go with that. So we see this candle blasting up. Then the first normal thing people would do is go to smaller time frame. So we're here. And then at the next, when all this is happening, so this red candle, you're like, okay, it's pulling back a little bit. And then you buy, right? Let me delete this. And let's say you enter a buy at this next, this green candle over here, right? So when the wick's coming up and it's going up, and then you enter on that candle, how many of you agree your stop loss should be here? Like below that wick, or 20 pips, industry standard, below the wick or 20 pips. How many of you agree you guys would have done that? Everett saying yes. Anybody else? Vlad is saying 1-800. Yeah, I'm not talking about you, but just general. Sheldon saying get in before the breakout. Yeah, well, you guys already know. But in general, if you didn't know what you guys already know, wouldn't you say the industry standard is below the wick or 20 pips? Right? I'm disregarding what Vlad and Sheldon said because they know this now. All right, DK is saying yes, right? So let's say we put it below the wick or 20 pip, whatever. It would be somewhere this zone, right? Roscoe's saying yes too. Now, this trade was determined based on the 4-hour candle, right? It went up, you saw that pullback, you entered. Beautiful. You're going in profits, amazing. Then it's pulling back. You're still like, okay, it's still above. Some people just freak out right here and they'll exit, right? If you don't know what you're doing, you're gonna freak out at the first pullback and you're gonna exit. Or you can simply take profits up there, exit for the retracements, and then enter again. But I'm just saying, somebody who's bought here and who's thinking that this is gonna go through the roof and he's gonna be a millionaire on this trade. That's unfortunately 80% of the people think like that any trade they take and it goes in profits, it's gonna make them a millionaire. But look what happens. Your stop loss was there. Did you get stopped out here or no? Yep. And then when this happens, what's the first thing people say? Because see, it came down, it stopped you out, and then it went back in profit. What's the first thing people say? The first thing people say is their broker messed with them. Their broker stopped them out. Well, yes, because the broker's there to make money, just like you're there to make money. So if you use the industry standard stop losses of 20 pips or just below the wick, this is what happens. And this is going to happen to you every time. This will keep happening. And look at that after that. Look at this. Look at this big move. You missed the whole thing. Why? Because your stop loss wasn't proper. To understand the point I'm making. So, but stop losses, you cannot just use the industry standard. Because do you guys think of it in this way? If there's an industry standard and I'm the one, let's say I'm a market maker and I have the institutional money, the only way I'm gonna make money is when somebody else loses money, right? Like, yeah, we all know Forex is $5.3 trillion market, this and that, but only 5% people are making money. 95% of the people are losing money every day. And hence those 5% are making money. And trust me, I've met some Forex traders. You'll be surprised to the kind of money they make within a day. You can see and tell that hundreds and hundreds of retail traders blew their accounts. Because this is what happens. And most of the brokers have an EA that tells them where most of the orders are coming and where do people have their stop losses. Now, if you think on top is any different, it's the same thing. Let's say somebody sold here. Their stop loss would have been just above this wick, right? And look at this. They got stopped out and then the move came down. Look at this. So first, these guys who were in a buy, they were stopped out, then it went up. And these guys who were in a sell, they got stopped out here, and then it came down. So you see how everybody missed the whole move? Because everybody used an industry standard stop loss. Think about this, if you know the industry standard, don't you think the institutions that actually move the market know the industry standard too? So why would they leave free money that's on the table that every retail trader is giving them? They're going to take that money first and then go. This can be avoided simply by being aware of the momentum or just by watching the move from a distance that, okay, let them do a stop loss hunt and then I'll pull the trigger. If you only waited a little bit and then you let them do this and you entered somewhere here and then you put your stop loss below this way, look at that. Even the second time, it never came close to you. Look at that. Is that making sense to everyone? Sheldon, is that making sense now? I've seen Sheldon's charts. I see him. He always waits for the stop loss hunt to enter. Yeah, I can tell that from your charts, Sheldon. But yeah, this is a good way. Always wait for this and then pull the trigger. That's why I say learn the momentum. See when the sellers are dying. Don't blame your broker. That's your broker's job to take your money. How else is he going to make money? If your job is to make money, broker's job is to make money too. You cannot blame anybody. It's completely on you. The first way to improve is acknowledge that you're the one responsible for profits and losses. Don't blame anybody else. And that's when you can improve. Don't follow industry standard stop losses. Because brokers have an EA. They can see where your stop loss is. Comes, your stop loss has been taken, and that's when the whole move goes up. Come on, tell me, how many times does it happen? You get stopped out, your analysis was correct, you got stopped out, and then the whole move goes in your direction, even a lot more pips than you actually thought. Tell me, doesn't that happen? Yeah, and this is why it happens. So you wait for that perfect entry. See, don't just think in terms of charts. Think in terms of a bigger perspective too. Let's say, let's say some fruit. I don't know, apple. Let's say an apple costs $1 for one apple, right? So if everybody keeps buying more and more apples for $1, what's that gonna do? That means there's more demand, right? So the prices go up. Basic economics, right? Prices go up. Now let's say people keep buying, prices keep increasing from $1 to $2 to $3 to $4, $10, $15. Now let's say one apple is $20 a piece. Are you gonna buy it? When you knew something is worth $1, are you gonna buy it for $10, $20? You won't, right? What are you gonna do? You're gonna patiently wait for the demand to decrease, let the price fall, and then you'll buy it again. So why don't you think in terms of that in trading too? Think in terms of that in trading too. Don't just buy it because everybody's buying, or don't sell because everybody's selling. Be a step ahead. Think like a banker. If you want to make money, don't do what everybody's doing. Because if everybody's following the industry standards, then you know for a fact most of the people are losing money in Forex. And this is why that's happening. So wait for a discount. Let the price come down. If you miss a trade, you miss it. Let that fear of missing out go away. That's not good in trading. It's only going to make you anxious, stressful, and most likely lose money. So be smarter than that. Be a step ahead. Don't do what everybody else is doing. Now, let me show you another example of this. Well, this is actually today. EU, look at this. People who sold up here, they would have entered at the next and their stop loss would have been at this wick. I bought somewhere here, I don't remember. Sorry, I mean, I sold up there. I sold up here. My one entry was like right here somewhere. Then I added a position at the next level here somewhere, right? And when I woke up, it was all the way up here. I was in negative. Everybody saw that. I'm not even like making that up. And look at this. So most of the people would have their stop losses here, right? But my stop loss was up here. Actually, sorry, my stop loss was up here. Here, my stop loss was here. Not even the first line, because there's SNR area here, over here. That's your SNR area. And it totally came there, disrespected that, and came back down, which is why I was holding. I knew it's going to come back to profit. But people who simply sold and had their stop loss right above the wick, then they get stopped out. Look at that. So if I followed the industry average, I would have been stopped out with such a big loss right here. But I didn't do what the industry standard is. And you guys saw that that whole negative was turned into profit. And now I exited because it's Friday and I want to be done for the week. And this is why I always say, don't stack your trades either. I entered one position up here. Next position I added after this retracement. So I basically used these profits that I was running in to finance this next position that I opened. So even if this position went against me, it would just take the profits I'm running in. So my initial investment or my initial equity is protected. This is why I'm against stacking. Yeah, stacking is a way you can get more money, but if it goes against you, it's hard to control it because we all know markets can move really fast sometimes. And We've all seen that. So this is a live example right here for you with stop losses. You see why you need to let go of the industry standards if you want to make money. Be smarter than that. If you see it coming up, don't panic. See if it's a stop loss hunt or is the move actually changing. Look at this. These sellers, they came down with force. These buyers simply died here. So this candle came up really fast, but at the same time, it has wicks on both sides. So don't freak out. The sellers are not dead yet. If you're thinking about buying just because you see this move, well, let the sellers die and then buy it. Wait for that momentum to die. Don't rush into a trade, else the same thing's going to happen. You'll get stopped out because you rushed in it, and then it will go in your direction. Does that make sense to everyone? Guys, the Zoom is going to end in 3 minutes. So if there's any questions, any comments, please let me know. We have 3 more minutes. If I missed anything, let me know. We can go over it quickly. Or DK saying, can you go behind a bit? Yeah, DK, where? Back to the consolidation part. First example. Which one was that? Over here? Yeah, what about it? DK, we got 2 minutes, bro. Hurry up. After the big rise, yeah. We wait for it to go down, then enter buy. See, the thumb of rule I go with, let's say I missed this buy in this zone before the actual breakout, I wouldn't chase it. I wouldn't buy it. After that, I would be looking for one level to be done, and then I would aim to buy here. In this zone, I don't care how many pips that is, I wouldn't chase the market. I wouldn't enter. Then I would enter up here and I would know where to take profit. My take profit, I won't lie, it wouldn't have been at the top, but once I would have seen this candle, I would have exited here. But if I look to the left, maybe I would have seen that. I don't know. I don't know this trade. We're just picking random stuff. But yes, to answer your question, I wouldn't enter in this zone whatsoever. I don't care how many pips I miss. I won't chase the market. My next entry would have been somewhere here to this buy. All right, DK, 1 more minute. Let's go. You're welcome, bro. You're welcome. Would you say the same for the sell? Yes, same for the sell. The sell, you wouldn't have seen it coming up here, but here you could have totally, if you knew what you're doing, you could have totally got an entry here. Totally. Up here, this would have been on the daily, but you could have sold it here easily on the 4-hour chart. All right, guys, I hope this webinar was helpful. Thank you for your time. I hope we all learned something. And it's the weekend now, so everybody get off the charts, man. Enough trading for the week. All right, guys, have a good weekend. I'll see you guys in the group.